Hello everyone and welcome to the Forex Technical Market Update for April. Today is Wednesday, April 13th, 2016. I hope you all are having a wonderful day so far and look forward to having a good rest of the trading month and the trading year. In front of us, we have a chart of the US dollar index. This is the chart that everyone is keeping an eye on at this point in time. Why are they keeping an eye on this chart? Because we are in a broad channel consolidation here with the US dollar index. We did have a breakdown here, the market snapped back. We had another breakdown here, the market snapped back. And what we're doing is we're seeing that the market is encountering some support in this area right now, and looks like we could be seeing the beginning of a possible buy signal. This is how the channel looks on the weekly chart. This is how it looks on the daily chart. So this is what we are keeping an eye out on, because when this market does break, if it breaks to the downside and we have a sustained break, we could see a pretty strong move to the downside, aka a strengthening dollar. Or if we turn around, we could return back to this channel top. So very important juncture we are in the US dollar index. I could even draw another area of support, let's say at the very bottom, these very lows that did occur. So let's say the market closes below this line here. These are the very, if you take into account the swing lows, these are the areas of support here. So that is another way to look at it. But to see that this market is broken definitively, I would want to see a close below this spike low here. And then I will say this market has broken to the downside. Looking at the euro, similar situation. We're in a channel consolidation. It's almost not exactly, but a mirror image, opposite image to what's happening with the dollar index, where we see the market came out, broke, and came right back below. 2, 3, 4, market came up, and it's now at this point in time, and we're seeing a slight sell-off in the euro. Now, why this sell-off is significant is because, let me just expand this daily chart more. We see a 1 doji here, 2, 3, 4, 5, 6, 7, 8. So for the last 8 days, the markets have been in a sideways consolidation pattern, and we could be breaking out today. What we normally see is breaks and then the market rallies. So what we want to see is that the market closes below this doji low at 113.26. A close below 113.26 would be bearish for this market, and we could see further selling in the euro. But just keep in mind that the market can rebound from here and can rally from here, as we have seen in previous days. We want a clean break below, and that's why we're looking for a close below these dojis. Okay, so that is what's happening in the euro. I know a lot of FX traders are a bit frustrated by the lack of movements, especially trend traders, the lack of movements in this market, because we have had a sideways market for a long time. Taking a look at the crosses, we see a market that is trending fairly nicely. The British pound versus the Swiss franc, we see a series of lower highs, lower lows, and this market is actually retracing up at this point in time. So just because the euro is not trending, that does not mean we don't have other markets that are trending. Taking a look, for example, at the euro versus the Japanese yen, look at this. This market has been trending. Market head and shoulders top here, shoulder, head, shoulder. Market broke down, and we have seen a series of lower highs and lower lows. So what we are going to see is if this market can break below this 122 low on the euro versus the Japanese yen. Canadian dollar has been very strong recently. We are seeing the Canadian dollar after the market, US dollar topped out against the Canadian dollar 145. We see the market move down to the 128 region. And oftentimes I say the better way, and I find that the better way to trade these markets and to make money from these markets is to capture large pip movements in the markets and not just 10 pips, 15 pips, or 20 pips. What about collecting 300 pips, 400, 500 pips? This is how large funds trade. The majority of large funds that trade trends, this is how they trade. They look for fairly strong moves in the market, and that's what I advocate traders do, because you'll find that if you can get the concept down properly, your profits will be much more consistent. Taking a look at the British pound, choppy price action here in the British pound. We see the market moving to the downside, but not the trend has not really developed in either way. Support in the British pound is at 140. If we close below 140, we could challenge this 138 low. If we close above the swing high near the 144.50 region, we could break up and then challenge the 146 level in the British pound. Taking a look at the Australian dollar. Australian dollar has been fairly strong recently, but we're at a very critical Fibonacci retracement. And folks often ask, how do you draw Fibonacci retracement? What you do is find the swing high, down to the low, swing low. The market is currently, so we want to do from this swing high here down to this swing low. Okay, so hit the Fibonacci retracement tool, draw the Fibonacci retracement. So you have this retracement, and the market is currently at the 0.618 retracement level in the Australian dollar versus the US dollar. So what we want to do is see if sellers come in and sell this market to the downside, and that could be a sell signal with Australian dollar versus US dollar. Other than that, we could see the market continue to rally and probably rally up to the 786 retracement level. Taking a look at the gold market and just an update in gold. There have been a lot of folks that are saying gold is breaking out. And the reason they say this is because the market has broken this all-important trend line here that we see. Market broke below this trend line or above this trend line, and what we see is this trend line acting as some support in the market. The market also did break this important swing high in the 1175, 1180 region. So gold is pretty strong at this point in time. If we do close below 1180 down to 1200, we could see another sell-off in the market. But for now, the market remains fairly strong. As I said, if we close below 1200, that could be an indication that it's time to exit longs in the gold market. Okay, so and in closing, I have been speaking to a lot of traders over the last couple of days, and I know that there are folks out there that really want to get these markets and that really want to develop a strategy for long-term profits, because the Forex markets is something that you can make money in. You just have to have the correct information and the correct knowledge. And folks who are successful that I find are folks who take action and continue to learn about the markets. I've been having a series of webinars. I encourage you to sign up for the webinars, and I will lay out in great detail a strategy that has done very well in terms of consistently being able to capture larger pip movements in the Forex market. There should be a link below this video to sign up for the next webinar. Thank you very much for listening, and I hope you all have a wonderful day.